To Symphony and it came out with its Q1 earnings, but to discuss more about how the quarter has gone by and how FY25 will shape up for the company, Nrupesh Shah, Managing Director of Corporate Affairs at Symphony, joins us now. Welcome to the show, Mr. Shah. I want to understand that you've had an extremely good quarter, and this is, I reckon, it's on the back of good summers that have taken place in the quarter so far. But I want to understand overall, what is the demand outlook like, and how much of this is value versus volume growth?
Thanks. No, so there has been phenomenal demand in summer, but it was also on back of series of initiatives and strategies on which we were working during COVID and post-COVID, including launch of path-breaking models, penetration in semi-urban and rural market, D2C e-commerce and alternate channels, and also adjacent product category. So it's a combination of all that. And hence, probably in summer related industry, air cooler, I think, has registered the fastest growth, which otherwise there was some skepticism probably in the mind of some of the analysts that air cooler may not be a viable category or may not grow much. But in reality, not only in the cooling appliances category, but across summer related industry, air cooler has registered the fastest growth. And this is true not only in India, but we know very well because of our international presence. Even in overseas markets, that's the reality, especially considering climate change and summer warming up year after year. And hence, currently, whether at a company level or at a trade level, in India, almost across the geographies, in Mexico, Brazil, and few of other overseas countries, the inventory is much below normal level.
Right. And just to give a context for the viewers, can you tell us and quantify that value versus volume growth for us? Have you taken any price hikes? Overall, what was the volume growth for your business in Q1 FY25?
So on account of competitive reason, we exactly don't share that, but you can take it that value growth is almost in line with volume growth, something here and there, or subject to product mix change. As far as price hike is concerned, effective 1st July, there has been a price hike in some of the models. In some of the models, tactically there is no price hike. And just yesterday, we announced launch of 17 new path-breaking models across 6 range. And they are at a premium level in terms of the tranquility and calmness of the cooler along with the efficacy, and some of the models are really at an entry level to take on certain local players or so-called partly unorganized players. And for the first time in our history, at a time in 6 range, 17 new models have been launched.
Okay. And Mr. Shah, so all of these new launches, you've said that you've launched 17 new launches. I want to understand that what is the kind of top line addition will these products give for the entire FY25?
So as per our IR policy, I can't share any specific guidance for the quarter or year or otherwise. However, we are very optimistic about the potential as well as top line and profitability growth on back of summer 24 performance.
And a lot of FMCG companies, Mr. Shah, have seen a significant rural demand uptick, and in a lot of cases, the rural demand has outpaced the urban demand. What is the trends that you're observing in the consumer durable space? Then has it been the same case in Symphony as well?
No, absolutely. There has been a same case, but it's not only on account of the rural demand. It's also on account of the kind of the network what we have created in rural and semi-urban. And on top of it, we believe that still lot can be done and miles to go. Once products are available, appropriate network is created. I think there can be further boost.
Got it. And Mr. Shah, despite the significant uptick in revenue, the cost of raw materials have come down. So what is exactly happening there? What is the kind of raw material price trends that you've observed in the quarter?
No, in the quarter, I think raw material price by and large was for us almost in line with earlier two quarters, but it was also on account of partly tactical pricing and sales mix on account of which we could increase the gross profit margin percentage.
Okay. And Mr. Shah, I also want to understand that, you have announced a buyback. Do you think that the promoters will also be participating in the buyback?
So just yesterday, less than 24 hours before, board of directors have recommended and announced the buyback, including the amount and pricing. So yet to take a call on that. But to me personally, I don't think it's an appropriate question because whenever there is a shareholder payout, it can be in two form, dividend and share buyback. If it is a dividend payout, this question is never raised or asked because all the shareholders in proportion to their shareholding get the dividend. Why it shouldn't be applicable to share buyback also? On the contrary, in share buyback, if we consider end to end, that is, company pays the income tax versus shareholders pay, then in share buyback, net inflow to the shareholders all put together is about 8 to 10 percentage higher than dividend.
Right. Okay. So basically, the buyback that you've done, what you're saying is done in the new budget announcement. There has been different changes in buyback rules, and that company is not going to pay the buyback. So, do you think that you've announced the buyback to take the benefit of this then?
Yes, one of the reasons, but at the same time, buyback also conveys the management and company's view about its future, about its potential and true value, along with whatever slightly accretion in EPS. And hence, when there is a surplus, why unnecessary to burden the equity?
Right. Okay. And, Mr. Shah, in terms of your Australia performance, revenue was down around 14%. And there are some kind of demand headwinds that Australia business is facing. Give us some color on that, and when do you expect a recovery there?
No, so in Australia, certainly there are demand headwinds because there are some economic and macro factors, particularly post-COVID. Many real estate players are facing major trouble. And until recent past, our substantial sale was attached with them. So that was number one. However, despite decline in sales because of successful implementation of part one transformation strategy, which was essentially substantially reducing the cost of doing business, we have reasonably contained the losses. As far as part two strategy of our transformation is concerned, it should be in place by September, and we expect that in December quarter and then after there should be further uptick, and 25-26 should see the complete reflection of their transformation.
Okay, got it. Mr. Shah, one last question before I let you go. Your treasury position, that is your overall cash position, is around 534 crores. What are your plans with respect to this kind of cash that you're sitting on? I believe buyback will be a part of it, but apart from that, anything else that is on the cards right now?
So in current quarter at a console level, our PAT is 88 crore, buyback amount, interim dividend and taxation and expenses put together on buyback all in all, at a company level, outflow will be about 98 crore. So it's almost like 115% of the quarterly profit which is being paid. And our stated payout policy is at least 60% of the PAT. So we will see down the line, but as such, immediately there are no acquisition plan unless there are some compelling opportunities.
Got it. Well, Mr. Shah, thank you so much for giving us those insights on Symphony and taking out time and speaking with us at NDTV Profit. But with that, it's time for a short break.